Jim Bianco joining us. Jim has over 2 decades of experience covering fixed income and equities. Jim, it's a pleasure to have you with us, even though you are so far away. We feel so closely connected to you because of the satellite network that we've got set up here. Let me ask you, first of all, about today's trading. A little bit of a swing today, not a lot of volume. I mean, how many people are just set up waiting for tomorrow's election results and really waiting for Wednesday's Fed meeting results?
Oh, I think the short answer is everybody's waiting for tomorrow and Wednesday. And that's what you get on a day like today. You get a little bit of jittery trades, and then you throw in the JP Morgan news, and everything gets overreacted as everybody tries to figure out what tomorrow is going to mean and what Wednesday is going to be and what that's going to mean.
What do you expect for the actual number? I mean, if we get something, for example, below $500 billion, does the market become very disappointed and sell off?
Yes, I do think it does. I think that the talk and the threat of quantitative easing has been a big boost to equity markets since the August 27th speech in Jackson Hole. The market expects at least $500 billion at about $100 billion a month rate. That's the number you hear over and over again. And if there's any deviation below that, I think the market is going to be very disappointed. Now, if you go way above it, it may not be that enthused because of that $100 billion a month rate, but at least it won't be disappointed at that point. So the risk is definitely to the downside, that a smaller number would hurt the market more, I think, than a bigger number would help it.
And Jim, let me ask you, we talk about quantitative easing a lot, but obviously the elections are big on Main Street's mind. How important are the elections and the results there for Wall Street?
Oh, I think they're very important, and I think you have to cut it in 2 ways. First of all, since about late June or July, everybody expected the House to go Republican. In trade right now suggests that there could be as many as 60 to 65 Republican seats. That's way more than they need. So that's probably a non-event for the marketplace, the House going Republican. That's been priced in. Interestingly, though, just today, In Trade is putting the odds of the Senate at literally 50-50. That's where they've got a 50 Democrat, 50 Republicans. And given how many tight races there are, it might be a couple of weeks before we find out who has the Senate, because they're going to have to go through the whole recount thing and figure it all out. So maybe by Thanksgiving we'll have that sorted out. So the Senate's going to be the place where it's going to matter for the market. And don't be surprised if that's not settled tomorrow night.
Hey, Jim, it's Dominic here. One of the things that people have been talking about is this idea that if the Republicans do somehow manage to take control of one of the chambers, or maybe you kind of come close to both, they're going to kind of immediately impose this idea of austerity, if you will, or cutting spending, perhaps not raising taxes, but at least cutting spending there. What's that going to have? Is that going to have any impact at all on the markets, given the fact that QE2 is pretty much front and center on everyone's mind right now?
If the Republicans do something, like suppose a cut in spending, that alone isn't going to do anything for the markets. It's whether or not Obama decides to go along and entertain the idea. If he doesn't, then we're just going to have one plan that's not going to go. We're going to have Obama propose another plan that's not going to go, and then we're going to not have anything. But if there is some talk...
Jim, sorry, what if we see taxes go up across the board? I mean, if nothing happens on the extension and you see taxes go up not only for the top 2%, but everybody sees a smaller paycheck, and then you see capital gains and dividend taxes rise, the debt tax rise, et cetera. I mean, is that a real problem for the U.S. economy, for the markets?
Yeah, and that would yes, and that would probably happen in the lame duck session before we even get to the new Republican House, assuming that it goes as predicted. It would be a negative, but to some extent, I do think that that's somewhat priced into the market. The expectations are that there's going to be an expiration of those tax cuts and that taxes are going to go up. I know a lot of business people have been making plans and altering plans in anticipation that taxes are going to go up. So it's not going to become a big shock. It shouldn't be a big negative for the markets. It will be a negative, but it won't be a surprise.
What kind of alterations are those business people making? I mean, you're seeing people take income this year that they would have taken at the beginning of next year. You're seeing people make charitable donations this year that they won't, or next year that they won't make this year, et cetera?
Yes, and rushing deals that need to be done. to get them closed before 12/31. If there's a purchase or a sale of a company that might result in a capital gain, they want to get it done before December 31st. So they're really pushing hard to get a lot of that stuff done. So there has been somewhat of an acceleration of business activity in terms of asset sales that's been going on now, and you'll probably see a fall off of that in January and February.
Hey, Jim, it's Adam. What about the dividend trade? Because we somehow seem to kind of glaze over that. I mean, if in fact you up the tax rate on dividends, aren't you just killing this market?
Well, you are, because dividends are a big play in the marketplace right now, that they are a defensive play. They are high yielding more than treasuries. And I think that if you do raise taxes, your after cost levels go down. But again, I would caution, I think that in some respects that's known in the marketplace. It's not going to be out of the blue. It will be a negative, but it won't be a devastating negative that all of a sudden it was, where did this tax hike come from? I wasn't expecting it. A lot of people are expecting it, so it shouldn't be as bad. It's not good, but it shouldn't be very, very bad.
Let me bring in Andrew Keene right now, independent trader. Late to the party, really. Andrew, you're grounded.
That's
first of all,
having too much fun trading today.
One demerit.
Let me ask you seriously, Andrew. You trade equity options for GE, for Apple, Goldman Sachs, Chase, JP Morgan Chase. How big is the trade today? Because we seem to get an interesting move after the JP Morgan Chase news came out. Is that one of the concerns for you? Is that why you're late?
Well, we did have, a little bit of a move. We had ISM this morning. It was really good. We get to this 1192, 1193 level, and we don't seem like we're strong enough up there. The market really hasn't moved over the last couple weeks. We're waiting for QE2 later this week. We have some earnings. We're waiting for elections. Just not being able to get through this 1192 to 1193 makes me think that we might reverse in the next couple days, even this week.
Hey, Andrew, it's Dominic here. Jim was just talking about this idea that a lot of stuff's already been priced into the marketplace right now. Is there anything that can happen this week that will provide enough of a catalyst to either make this market want to go up or want to go down?
Yeah, I think if QE2 comes on, it's dramatically different than what we think. If it's too high at like 500 billion, I think we're going to sell off. I think if it's too high and it comes in at 2 trillion, where Goldman Sachs says it might come out, I think we're going to sell off too. It seems like we have very positive momentum, but the market won't go higher. 1192, 1193 seems like the top so far. I think we get a little bit of correction here. We've gone very fast, we've gone up very fast, and I think it's time for a correction.
Jim, I think Dominic asked a good question, and Andrew's answer is interesting. If it's too low, he thinks the market's going to sell off. If it's too high, he thinks the market's going to sell off. Is there anything that could boost the markets this week?
Obviously.
Yeah, probably.
Sorry, Jim.
Sorry.
Yeah, I'd say payrolls on Friday. A decent payroll number is probably your best bet for boosting the market. And I'd agree with Andrew that a gigantically large number like 2 trillion, the Goldman Sachs number, would be viewed as hyperinflationary and could be very counterproductive. So I don't suspect that you'll see something like that. So if you're looking at the elections, if you're looking at QE2 and you want to know what is just going to be flat out positive and a good positive surprise, your best bet, not that I'm suggesting it would happen, would be a good payroll number on Friday.
Andrew, what do you think about the payroll, the employment picture? Chicago usually is more focused on it, I think, than New York is, and it's kind of been put on a back burner because of QE2, because of the elections, but obviously it's still a big number on Friday.
Yeah, obviously, the economic data are very important. Payroll is going to be huge on Friday. We have elections coming up. It's pretty much set in stone. If you look at it, it's like an 80% chance the Republicans take over the House. And then QE2, I don't think QE2 can be anything but negative for the market. And then we have to look at payrolls Friday. But I think the sentiment around QE2 and what the number actually is and how it's analyzed will be the big thing this week.
All right, Andrew Keene, thanks so much for joining us. Jim Bianco, we appreciate you being here as well. We're going to